Hello and welcome to the show. Today we have with us Munish Varma, who's the managing partner at SoftBank Investment Advisers. Munish, welcome to CNBC TV18. Now, my first question to you, can we safely say that, SoftBank is and will be one of the biggest beneficiaries of the spate of unicorn IPOs that we are seeing in India right now? And if you can also give us a sense of the double-digit returns that you could be making out of them.
So first of all, thank you for having me. Pleasure to be here, Nisha. So look, we've been investors in India for a long period of time. As you know, we've been significant investors. We've always had a view that India's demographics, internet penetration, smartphone usage, data consumption would lead to big outcomes in the space of internet and tech-enabled businesses, right?
Yes.
So we've been investors. We had Policybazaar, which is our first investment that got listed on public markets yesterday. Great outcome. We have another one going public day after, which is Paytm.
Yes.
And we've been very happy with our investment returns in these investments, and not just these two, others as well. And like you said, Indian capital markets right now are robust. Markets are looking to invest capital in companies that are growing fast, that are tech-enabled, and we hope that a bunch of other companies will come to markets fairly soon as well. I feel very confident for the prognosis for the rest of our portfolio as well.
All right. Since you're feeling so confident, one question that is on top of everybody's mind who's been actively participating in the IPOs and investment decisions is Paytm, India's biggest ever IPO. It's about to be listed this week, and you have a big amount of investment over there, and you're making good returns out of that investment as well. But you stay on as a substantial investor after listing as well. As an investor, what is it that you're betting on for your future investment which lies with Paytm? Because the valuations have been much talked about.
Well, if you think of Paytm, right, what is Paytm? It's a platform that connects consumers and merchants, right? Yes. And it's connecting hundreds of millions of consumers with tens of millions of merchants. And these consumers and merchants are transacting on that platform. So those transactions themselves have value to start with. And then as those transactions become deeper and the penetration becomes greater, there'll be multiple levels of monetization that Paytm is doing and will do more of in the future, right? So I think if I look forward 2, 3, 4, 5 years out, I think the ecosystem that Paytm has built by being at the center of both merchants and consumers, it's two-sided. They just don't have one side. They have both sides. Will be super beneficial and will be, as a company, right, it will allow them to monetize in a very effective and sizable manner, right, which they're doing even now, but I think that increases and the pace of monetization increases as time goes by. So we are, again, big believers in the company, in the platform, in the management team, and I think that will continue to be a very good investment for us.
Right. So as it goes on the path of listing very soon, one thing I want to ask you about the fintech bets of SoftBank in India. Now, how do you see it going forward? Because it's a crowded market. Fintech companies are going for lending as an opportunity, including Paytm, and that's what is going to give the massive amount of growth. Is SoftBank as an investor ready to take that risk?
So first of all, Fintech is a growth enabler. For any country, Fintech is a growth enabler, and the reason why Fintech businesses have great potential is also because if you are in Fintech and you have somebody's financial transactions, financial history, there are lots of adjacent verticals you can branch out into, right? Lending happens to be one of them. And again, when you talk about lending, financial services more broadly will take on different forms, right? One would be distribution. It could be distribution or manufacture of insurance products, distribution or manufacturing of investment products, and distribution of lending products or doing lending yourselves. Now, of course, there's a fine line between how much risk you take on your own balance sheet versus how much you distribute when we talk about lending. And I think different firms will find the right sort of balance that works for them, that works for their capital position, and that is, different firms will take different strategies. Lending itself, if done correctly, can be and is a very lucrative strategy as well, but then so is distribution. So I think you can't generalize it. I think it's firm specific based on the strengths that the firm has, the quality of the data that the firm has, and the capital that the firm has and the access to capital, whether it's equity or wholesale funding that a firm has. So I think different firms will chart their own paths.
So for your future investments in fintech, what will be the key aspects that you'll watch out for?
I think the key KPIs to watch in fintech investments is engagement, right? How engaged are the users? How much of their financial life are they trusting to the platform? How many times are they transacting on that platform? What is the access and quality? What is the quality of data that you have access to that allows you to take better, smarter credit decisions with regarding those consumers? So it's simply engagement, engagement, and engagement.
Yeah, and a lot of that comes in execution and focus as well, which we are yet to see in the biggest IPO, that is Paytm. But you came at a very good time and an opportune time, Munish, to India, because Policybazaar, a big portfolio company, has just listed not just a good listing on the first day, but it held on to the stock as well, the price, and has shown returns and gains on the second day. Is that a vindication of the valuations, which has been much talked about in the unicorn IPOs?
I think it's a vindication of the depth of Indian capital markets to start with. So if you think of the Indian internet ecosystem, right? A lot of capital came and a lot of capital got invested in private companies. The next step in that evolution is always to have these companies mature and then access public markets.
Yes.
Then the question is, are public markets liquid and deep enough? So what we've seen is a vindication of that point as of now, that public markets are liquid and deep enough to absorb these new age companies and give them a very successful reception, right? Now the next step obviously comes when, as these companies have gone public, and if you look at the cohort that's gone public over the last 6, 8 weeks, 2 months,
yes,
these companies will report quarterly numbers and the markets will watch them for their quarterly performance, quarterly numbers that they'll report. And that's the next sort of step in the evolution of, Indian internet investing, call it.
So while you said the depth of Indian market, Munish, here I would say there are two things that have happened, and one is good, one is probably not as much, is that it is backed a lot by the foreign investors. A lot of the book has been booked by the new investors coming into India, which is a good thing. But it also means that it is backed and the valuation has been given a stamp of approval more by the foreign investors, maybe not as much Indian investors. How do you assure the sustainability of these valuations? Because that will be the proof of the pudding. Yeah.
Agreed. And look, I think capital is global.
Yes.
So I think in these IPOs there has been significant participation from domestic Indian capital as well. And then secondly, sustainability of valuations and how these companies trade on public stock markets will be a function and consequence of two things. One, global macro conditions, general availability of liquidity, but more importantly, will be the performance of these companies, right? So as public companies, they'll come out, they'll have certain quarterly targets, they'll release their numbers, they'll release forecasts for next year, and as long as they keep meeting those numbers and performing on the commitments they've given public markets, these companies will do well and these valuations will reflect that. However, if any company, and not true just in India, but anywhere in the world, if you miss your numbers multiple quarters, then that obviously has an impact on the stock price.
In fact, we have seen that across the world in some of your portfolio companies and others as well in the US, and none of the global markets are saved from this particular phenomena. Munish. So is that a point that you look at? Because your own balance sheet will have mark-to-market performance based on the stock performance of these companies which are getting listed.
Absolutely right. So look, much like we're investors in these companies and much like other investors, we will watch these companies carefully every quarter when they release their public numbers to see if they're performing according to plan. And if they do perform according to plan, I have no doubt that the markets will reward them. The markets will reward good execution.
Yes.
And if there's any company that does not miss or does not perform as per expectations and has a string of quarters where they miss numbers, then the market will respond to that appropriately as well.
All right. So to another question in this, what is the kind of commitment that SoftBank shows to its portfolio companies? And now that the stakes are so high, you're in the listed space, you're in public view all the time, is there going to be more collaboration, more insight sharing and expertise? What is it that SoftBank can bring to the table for the portfolio companies?
So I think when we invest in a company, right, obviously we invest capital, but what we also have access to an ecosystem, right, where we've invested in across all the different vision funds and including SoftBank Group, 300 companies, I think, globally.
Yes.
So there's access to that ecosystem. There's access to different parts of the world from a geographic point of view where we can be helpful if companies want to enter Japan, for example. And then we've always made the right introductions for these company founders, which some of them have used more than others. And again, then we can make the introduction at the right level. Then, of course, it's for the two companies to talk to each other and see if there's anything commercially beneficial to both of them that they can get to an agreement on.
Yes.
So with public companies, again, we have to be a bit more careful. These are public companies, not private companies. So we will make introductions where appropriate. We will be helpful to them where we can be.
Right.
And rest is up to these management teams to run their businesses.
All right. So the upcoming IPOs now, Delivery, Oyo, Ola, what is your expectation as the investor from these?
Positive. As you know, Oyo and Delivery both have filed their DRHPs.
Yes.
So, and hopefully they will come to market in relatively short order once we have clearances from SEBI. And I think in terms of expectations, I think, look, both business markets are rewarding businesses that have a sound business model, sound unit economics, and are showing growth, and are showing significant growth. So I actually think that both of these companies we talked about qualify on all three of these criteria, and markets will reward them appropriately, and they will have successful listings.
Path to profitability. That was one of the key themes, Munish, that we were thinking about a year ago when a lot of IPOs were getting dressed up for, a lot of unicorns were getting dressed up for the IPO game. Now we have seen some listing, non-profitable ones as well, and there is market acceptance. Do you think another spate of IPOs coming in, probably the First Cry, Lenskart, there will be a better crop of companies coming to the market maybe for the year 2022?
I wouldn't say better crop. That implies...
In terms of path to profitability and profitability.
But different companies are at different stages of their life cycle.
Right.
So I don't think that's a fair comparison necessarily. Different companies, different stages. One, B, different companies, different growth prospects, and depending on the sectors they're in.
Yes.
And thirdly, different companies with different trade-offs for growth versus profitability, right?
Right.
So I think, again, you can't compare one with the other. I think you have to look at it sector specific. What is the opportunity, growth opportunity in that sector? What is the company doing to capitalize on it?
Yes.
How do the unit economics look? How would it look if they traded off profitability for growth? What are the levers that they can pull in the future? And you look at all those factors and then you make an investment decision.
So to that point, there are three factors I always say which has given a lot of support to the current season of IPOs is the liquidity flush across the world. Second being markets being more buoyant because of liquidity, and the scarcity premium. How much of that, and all three aspects are quite fleeting in nature. They're not fundamental to the core of the business. How much of that dependence on that would you give, and what is your pipeline for 2022 IPOs?
So I think, look, like you said, these have all been tailwinds for the market. These have been tailwinds for these listings. Hard to opine on what happens with liquidity globally.
Yes.
From a scarcity value, if you just look at India, right? So if you look at the crop of tech-enabled, internet-enabled, tech-driven companies, relative to the total number of companies that are listed in India, this is still a very, very small percentage. So I think adding another 10, 20, 30, 40, 50 doesn't meaningfully shift the balance. So I think there will still be a very small percentage.
Yeah.
So I'm quite comfortable with that. And then ultimately, like you said, companies will get valued on how they perform relative to their business model, right? So that's what company management should focus on, and that's what they do focus on.
Right.
Performance against their set of objectives, right? What happens with liquidity, what happens with scarcity value, what happens with overall market conditions, that's not in anyone's control.
All right, so how many IPOs are we looking at from your portfolio in the next year?
You know that Oyo and Delivery have filed their DRHPs. We should have a few more after that as well.
Right, so good bumper returns probably coming in.
Fingers crossed. Fingers crossed.
Right. And Munish, so to this point, this is one phase of the startup and the unicorn evolution for India that is getting listed on the bourses. The second one, in my mind, in terms of the valuation discovery, would be after a year when the lock-in periods start ending, and then there is more supply in the market and it will be widely traded, and the valuation discovery will happen more actively. What is the path to sustainability of these valuations then, and how do you foresee that phase?
Like you said, look, lockups for a year now, under the new DRHPs, lockups are for 6 months, and which is, I think, the global norm as well as 6 months.
Yes.
Once lockup expires, more liquidity, more ability to trade. We'll have to see how these companies perform then. Between now and then, 12 months, there is, a bunch of quarters to go, and they have to perform well. And again, when lockup expires, markets will, and there's more freedom to trade and there's more freedom to sell. People will evaluate it then, how the business is doing relative to the opportunity set that was presented to them, and take decisions. So we'll see. It's hard to predict out what happens a year from now.
No, but one theme that has been overriding is that at the moment you bring down your, marketing expenses, advertisements, and all those costs, your contribution margin, your profitability, and therefore, overall performance looks good. So it's up to it's a management call on how they balance the two.
Correct.
And respond to the public market now that it's a
But again, I think the question becomes, should they respond to public markets at all, or should they respond to the opportunity
What is
set?
your thought on that?
I think each management will take their own decision. My own view is they should respond to the opportunity set. That if you have growth, but you know that you have growth, that by pushing 3 levers you can increase or decrease growth, and you've proven how you can manage your business,
Yes.
then no reason necessarily to be short-term thinking in nature, right?
All right. Swiggy versus Zomato. And Zomato has been, again, a very good listing. Stock is holding on. If you could turn back time, would you have decided differently?
No, I'm glad that Zomato is doing so well,
Yeah.
because it makes our investment in Swiggy look good, and we as it has had great expectations of our investment in
Yes.
Swiggy, and the fact that Zomato is trading where it is gives
Yes.
us further validation.
Yes.
As you know, in the core food delivery business, they are pretty much neck to neck. They've obviously taken slightly different adjacent lines to expand in. But we feel good about our investment in Swiggy, and the fact that Zomato is trading where it is and has had such a successful welcome reception in public markets gives us even more confidence for investment in Swiggy.
Right. Fierce competition, duopoly market.
Super.
Swiggy listing, what is the plan?
You should ask Harsha that question.
All right. Moving on, acquisition cost of funding. That was one of the prime strategies that SoftBank had earlier, and bigger ticket size investments. Is that strategy now changing, Munish?
No, I think we don't define a strategy and then try and force that strategy in the market, right? We look at what the opportunity is, bottoms up, right? And if we find companies that have opportunities to grow inorganically,
Yes.
we'll certainly be very willing and able to fund them.
Right.
But it's not that we have a top-down strategy that says, okay, let's find businesses that need capital for inorganic growth and let's just fund those. We look bottoms up. We find a good business, good management team, good TAM, using technology, executing well.
Yeah.
And they can decide if they want to pursue or continue pursuing an organic strategy or an inorganic one. And if they need capital for either,
Yes.
as an investor, we'd be very happy to support them.
And how much of the investment is now making way to India now that you have seen good returns from the Indian market from your Vision 2 fund?
I think, look, we always expected good returns from our Indian investments. It's coming true now. And again, like you said, it's early days. They've just listed. We have lockups in place. We are significant shareholders. And we plan to be significant shareholders in some of these companies.
Yes.
So I think a significant portion of our Vision Fund 2 capital has come into India. We've deployed in India over the years across funds 1 and 2 and maybe SBG as well, north of $10 billion. So we still continue to be very excited about India's prospects.
There were statements made that 5 to 10 billion can be invested in a year's time or something.
I think if the opportunity set is there, we're not capital constrained necessarily.
Does it now give you a lot of risk appetite in the Indian market to go very aggressive, Munish?
I don't think our investing thesis, and I know you didn't ask me the thesis, but our investing thesis, style or ethos changes, including our appetite for risk, right? What have we believed in? We'll continue doing more of what we've always done, right? Which is look for good management teams, look for tech-enabled businesses that are solving significant pain points for consumers or businesses, big TAMs, big outcomes, and we'll look to deploy capital. So I don't think the fact that we've had on paper some successes in India
Yes.
in any fundamental way alters our investing strategy, whether it's from a risk profile point of view or what we are looking for.
All right. But in the larger scheme of things for SoftBank globally, has India notched up after this?
Yeah, it's a start, right? It's a start because always we'd invested capital in India, but this is the first. We obviously had an exit with Flipkart when we invested initially with the Walmart purchase, but this is the first Indian investment that has actually gone public. So it gives us a bit more confidence that Indian public markets are deep, that our companies are maturing, that our companies can list, can command healthy valuations. So yes, it gives us more confidence, absolutely.
All right. And also now the ticket size is much smaller, Munish, of your investments. So what is your strategy now going to be? Early investment in a promising, probable multi-bagger, and is that also your safety net for future?
We have flexibility on investment size. We don't have a constraint on what the minimum size has to be. Clearly, there's something that works efficiently. There's a minimum size that's efficient for us, but it's not a constraint per se. Certain sectors, Nisha, don't need much capital. If you look at an enterprise SaaS business, it doesn't need much capital. So you cannot, and if you don't invest mid-stage, for example, you can't invest late-stage growth because by that time you might not get an opportunity to deploy any capital, so you might have to go slightly earlier. We will deploy capital based on the opportunity. And again, if you can go slightly earlier in certain cases, which is the right time to invest in the company, we'll do that. And maybe that gives us an opportunity to do follow-on investments in the future as well. So we'll take that into account when we're thinking of the right size of investment or the right time to make that investment.
All right, and out of all the spaces that you're already present, and it's across the board, you have a large portfolio in India, which are your top 3 sectors you think in the new age, internet, e-commerce, and unicorn space, which are looking most attractive at this point, and we are going to see some deals fructifying soon?
And again, it's not a case of deals fructifying soon, but I genuinely think Fintech is a massive sector that will continue to throw opportunities. I think health tech, again, if I think 10, 15 years forward, I think health tech will be a very big space, not just in India, but in globally, and it's getting there now. And I would pick even enterprise SaaS, because I think India has some real competitive advantages in enterprise SaaS.
Thank you so much for joining us right here on the show, and all the best for your future listings and IPOs from the portfolio.
Nisha, thank you very much. Thank you for having me.